What makes a sustainable tax system? Well, a good start would be that it meets the present needs of today's economic society without jeopardising the needs of future generations. The government is currently spending over $100 million a day more than what it collects and is borrowing to meet the shortfall. Reforming our tax system by increasing fuel excise and GST rates and reducing individual and corporate tax payable, we will achieve a more sustainable tax system.
Australia's fuel excise was frozen due to the introduction of the GST between 2001 and 2014. Today, the value of the fuel excise is approximately 22% lower in real terms when we account for inflation. The 2014-15 federal budget announced a reintroduction of CPI increases to the fuel excise commencing November 2014. Rather than CPI increases, we recommend the fuel excise is increased at a rate of 2 cents per litre for the next 20 years. Australia's budget bottom line will be around $200 billion better off over the 20-year implementation and significantly eases the Commonwealth debt burden.
Goods and services tax is a flat 10% amount levied on most non-essential goods and services that Australians pay for. But when comparing our country's GST to that of other OECD nations, Australia startlingly lags behind. In 2012, Australia's GST tax revenue as a percentage of GDP was almost 30% lower than the OECD average. GST only applies to Australian providers of digital services, whereas overseas providers are GST exempt. This has been a rising concern for several OECD nations. Not only is this not fair for Australian businesses, but it impacts Australia's future tax law integrity and economic prosperity. GST must be increased from 10% to 12.5%. Based on 2014 figures, a mere 2.5% increase in GST would have increased government revenue by almost $26 billion. Furthermore, in order to remain consistent with OECD direction, GST should also be broadened to include all digital products from all sources and have no minimum price requirement.
Bracket creep refers to the fact that taxpayers will face higher average and marginal tax rates over time as their income increases with inflation. Due to the progressive tax model, bracket creep can influence relatively low-income earners' economic decisions about how much to work. It can also create incentive for higher-income earners to take part in tax planning or overseas relocation. Increasing tax thresholds once a year by inflation will not only stop bracket creep but promote spending in the economy. By giving people the capacity to buy more goods and services, save, and invest, individuals will generate more tax revenue for government services and income support. Treasurer Joe Hockey mentioned recently that bracket creep will be addressed next year, saying that personal tax cuts will definitely be on the agenda. He also revealed the possible decrease in company tax, which currently has the highest tax excess burden in Australia.
Businesses are the lifeblood of the economy, so cutting the company tax rate is an urgent and vital piece of policy which has benefits that far exceed detriment. The Henry Review states that cutting company tax rates will promote foreign investment, incentivise foreign companies to relocate their headquarters to Australia, encourage companies to invest in research and development and other innovation, allow higher wages for some underpaid workers, see better returns for shareholders, reduce profits shifting offshore, allow companies to invest and grow their company to be more competitive globally, employ more people and to stimulate the economy. These are all critical outcomes that will help Australia reduce its crippling debt and will result in a higher standard of living for every Australian. There are minimal reasons to oppose the company tax cut as signified by the majority of OECD countries adopting a much lower corporate tax rate than Australia. Any shortfall in tax will be completely or partially offset by shareholders paying tax and increased dividends from increased company profits.
Get involved and support the reform of our tax system. We care about our future and the future generations to come.